thank you so much, Kendrick, for taking the time today. I really appreciate it. I have been a big fan of Republic for a while now. It's a super intriguing company based on a super important topic to me, which is basically expanding the world of investments to, not just accredited investors, letting the common public, not only in the United States but worldwide, invest in interesting assets from startups to crypto, even real estate, et cetera. So, pleasure to have you on today. I think what would be great to get started with is just kind of walking through your background a little bit and telling your story. And then obviously, um, we'll spend a good amount of time on Republic and talking about what you're working on today.
Thank you so much, Jake, for having me on the podcast today, and for the generous introduction. As an immigrant from my family, I moved to the US from Vietnam. Financial access and financial inclusion, I think, are just topics on a lot of immigrants' mind because you typically come to the country without a lot of money. Investing is like, a couple steps away from like being, settled down and have some security. So growing up in the Bay Area, we weren't accredited investors. We weren't able to invest in like early stage Amazon and Google and Facebook. And so like the need or the desire or the interest of seeing all of these headline news about the next trend in finance and prosperity and seeing how they can be relatable to more and more people, particularly non-accredited investors, which is non-millionaires, has always been a very important thing for me. So my earlier professional background was in securities law, worked in hedge fund and asset management in New York, which even amplified the access and inclusion in equity when it comes to investment and wealth even more. And then I moved back to the Bay Area to do academics at Stanford and joined AngelList as their general counsel. So all of that led us to Republic because there was a huge change in the law back in 2016 that for the very first time in 80 years since the Great Depression, you don't have to be a millionaire to invest early. So that was the moment when I was like, stop whatever I was doing. And this is definitely going to be a lifelong pursuit to make investing, particularly private early stage investing across different verticals, more accessible to accredited and non-accredited investors in the US and beyond.
Yeah, it's super interesting. And you mentioned the background in law and then basically how the change in regulation was what led you to realize, drop everything. I got to go start this company. I got to go work on Republic. Um, I'm curious, there's a bunch of people who I admire in the tech and startup and investing and entrepreneurial world, who kind of got their start in law, quickly realized that there's, nothing against lawyers, but maybe some more exciting stuff for them personally to be done. And, they went and got into the business world. You talk about like Peter Thiel, and Keith Raboy over with him at Founders Fund, who was previously on the podcast. Naval, who I know you worked with closely, I believe started actually in law as well. What do you think it is about starting in law that, is there advantageous, aspects of starting your career that way when it comes to a career in business?
I can only speak for myself because the examples that you gave, that is Peter Thiel, Keith Rabois, and Naval, from what I know, they had that legal background, perhaps academically, but never truly practiced law. And so I couldn't, because the elements of the legal training and the law experience that was very relevant for me when I founded Republic, which is the ability to hedge and manage risk. Because particularly in financial technology or in financial services, if you're pushing at the frontier, you're navigating in a very highly regulated space. So if you don't have that legal background, you have to rely on outside law firms who by nature got to give you the more conservative advice to tell you how to innovate. That's hugely inefficient. The ability to make that risk assessment on my own and then consult outside attorneys oftentimes disagreeing with them, but can tolerate that risk has been truly a big advantage for Republic and quite frankly for AngelList when I was their general counsel as well. But there's also that legal training that's a little bit methodical, and I think the discipline of not worrying about working 18 hours a day because you're so used to it going through law school and working in a law firm. I think is also another advantage for those with that background training. And entrepreneurships, as you know, is exceedingly difficult. It requires everything you've got. So having that preparation certainly helps.
Yeah, it's very interesting perspective. I myself started out of college with a couple years in investment banking, and I think, similarly to what you said, you do get that training in having a certain work ethic that is, easier to maintain when you kind of begin your career that way. But what I can't really sympathize with as much is having that legal expertise. And I can imagine, I almost wish that I did have it because I'm always thinking, even outside of business, just in life, I'm always thinking like I wish I had just like a personal lawyer who I could trade some like equity in myself, basically, for just because, legal fees run up like really high. Just a lawyer who I could kind of like ask things because I just don't really, understand. I just don't have the fundamental understanding to really diligence things myself in that capacity.
Jake,
Uh,
you don't need to be a lawyer as long as you have a friend who's pragmatic and with a legal background. I'm happy to be your pro bono a legal friend.
All right, be careful. I might take you up on that, but I do appreciate the sentiment, and it's a super interesting perspective. I want to spend the majority of the conversation today talking about Republic, but before we get there, you also mentioned, having spending some time at AngelList. I believe you were also fundamental in starting CoinList, and now Republic is a part of this. What I understand is like a family of startup related companies, which also includes Product Hunt. Could you tell us a little bit about like your experience at AngelList, some of your biggest takeaways from that overall experience and CoinList as well, if it's relevant, and what that family sort of, what's the point of that family today, where these
Yeah,
companies are all interrelated?
yes, certainly. You mentioned Naval earlier, and I think in life, luck has a lot to do with one's career. And meeting Naval was definitely that moment, that just a stroke of luck that opened up my path in tech and venture. And indeed, this ecosystem of companies, AngelList, Product Hunt, CoinList, Republic, independent companies with its own destiny, but they are affiliated in many ways. So I joined AngelList when they first moved from straight up just an informational platform, sharing information on fundraising to the world, to becoming an investment platform with the syndication product. So the moment that you introduce investment products becomes heavily regulated. I think I was the first non-engineer hire and certainly the first legal and the first general counsel at AngelList. And there wasn't Product Hunt as part of the ecosystem at the time. And this was late 2013, early 2014. So as AngelList continue to grow, and it really does or did and still does deliver the mission of democratizing access to capital to the top startups in the valley, meaning allowing accredited investors, people who had money but didn't have access, to invest in early stage startups. And as they grew that ecosystem, I think AngelList saw that, hey, you can go a little bit earlier with product hunt, right? Which is just, hunting new products. And maybe Republic is where a new product that then becomes a company can fundraise some capital. And then after that, they can go and raise on Republic like a more meaningful round. So I think AngelList's vision in looking at Product Hunt and Republic at the time was filling out or completing the cycle of maturation of a startup from product ideation to setting up a company and get that first friends and family capital. And if you don't have wealthy friends and family, you go to Republic. And then after that, you become credible enough to get VC backing and AngelList syndication would come in. Well, that's the initial plan, but I'm sure that with time, each of these companies also grew and expand beyond its original, plan and have its own destiny, which is what Republic is today. We do a lot more than just early stage startup investing. We have real estate, we have crypto token offering, and we do late stage deals, as late stage as like Robinhood and Spacex. We call ourselves from seed to SPAC or seed to pre-IPO. CoinList is a very interesting story in that the reason why I was a co-founder and the first interim CEO to run CoinList for a very short period of time was due to the legal complexity of getting a business model like that up and running and mapping out a compliance framework. So because Naval and AngelList knew that I have that background, so they called me to lend my support and lay that very initial framework. Where CoinList is today is a far larger and more established and successful, iteration or exhibition of what we had at the beginning. And I don't, purport to take any credit for their success today, but that the heavy legal components in everything that we do when it comes to investment, whether it's token offering or traditional equity offering, was the reason why I ended up getting so involved with, all of the AngelList affiliated companies, since 2014 or so.
So you don't need to give yourself any credit for CoinList, but I'll give you some credit. It sounds like, anyone who was interim CEO at the beginning obviously plays some, some level of a critical role in the development of what it's become. And even if you haven't been, directly involved for quite a while, I can kind of outside looking in assume that you're a large reason that it was able to grow into what it is today. I want to talk about Republic now directly. You kind of hinted at how it builds upon AngelList's original, purpose, which I think is still true today, to basically democratize access to investments, if I'm getting that right. I know you have specific terminology, but that's kind of how I think about it. Can we just lay out for those who aren't as familiar? I've obviously spent some time familiarizing myself, but what is Republic and why is this something that the world needs?
Yeah, so Republic today, which has grown since 2016, but today we're a multi-asset investment platform where anyone, anywhere around the world can invest in private deals across different verticals, from startups to real estate, from crypto to video game financing. And we will be adding more things like music financing, movie financing down the road. The private investing is literally the world's second oldest profession and the second oldest pastime. The first one also starts with a P, but that's how people truly generate and aggregate wealth. And up until now, due to both a very archaic infrastructure as well as outdated regulatory framework, non-accredited people could not invest. I'll just give you an example. The American dream of owning a house. Like everyone growing up in America has that beaten into you. Even if you didn't grow into America and you watch movies, you know that the dream of owning a house. Realistically, how many young Americans nowadays can dream of buying a home? I mean, just look at housing prices and look at the economy currently. So if you hear this narrative and you cannot participate, imagine that if you save $1,000 and now you can invest in a residential home in San Francisco, which the real estate market is not doing well. And if you invest now, you're probably going to make something down the road. You're never going to lose it all, unlike startup investing. And you're not going to make 100x, but you're going to, realize some gain. Just being able to do that, how much that would do to one's financial sophistication as a college student, as a struggling young teacher, and the ability to invest and aggregate wealth in that fashion has both social educational and financial value. I genuinely believe that financial inclusion, particularly in the private market, is indeed the solution to the social inequities that we see. And that's what we're focusing on. And that's why I think it's something that is worth doing several lifetimes over rather than just in a decade or two.
Yeah, I tend to agree with you there. As someone who's not an accredited investor myself, but had the opportunity to, I got to invest in real estate with a buddy of mine. Was fortunate to find something that worked, and it's been super educational. But there's no reason you should have to, fully invest in a property to be able to learn the ins and outs of real estate, which can be super helpful down the road, whether it's just buying your own house for your family, or whether you do want to pursue, more of a strategy, um, investing in real estate. And you mentioned like Robinhood was one of the companies that's raised through you guys, Spacex, another incredible one, Carta as well, which I think is operating on pursuing a similar theme. They might be coming from a different angle, but I think ultimately I view them as democratizing access to investments as well. I want to talk about so Robinhood, has gone kind of viral to some extent over the last year or so. People investing in stocks like Tesla, and they might not necessarily know what they're doing. Some people have some pushback on Robinhood for making it a little bit too easy for people to invest while being relatively uninformed. Um, you guys are enabling people, and similarly to Robinhood, I'd say you guys are enabling people to invest small amounts of money in, uh, you know, products or startups, whether it's, startups or real estate or crypto or later stage companies like SpaceX. You're enabling people to put like $20 in these types of assets, or $100 or whatever it might be. So it's similar like in that way, and it's more consumer friendly, just like Robinhood. But what's different, I think, is that you guys take like a really diligent and rigorous approach to what investments you allow on your platform. And I understand you only accept like 1 or 2% of all the companies that aim to raise money on your platform. What was the thinking around, being so having such a high threshold for the companies that you accept, and how do you guys go about diligencing some of these opportunities?
That's a great example, Jake, because we often in conversation describe ourselves as like Robinhood for private investing, because that's exactly what we're aiming to build. But the reason why the curation lens for Republic is so high, meaning so few companies get accepted, is due to the fact that early stage investing is very high risk, right? Like the majority of early stage companies do not, manage to survive the first year. And I think something like 80% do not manage to survive like the first 3 or 4 years. So unlike the public corporations that Robinhood onboards on their platform, the companies that Republic feature private investing is riskier indeed, because the risk of the company not working out and resulting in a total loss is high. But the risk of upside return, meaning 10x, 100x, is also there. So it's high risk, high return. However, the issues that you see on Robinhood with like people trading on, with margin that they really shouldn't be because they don't know enough, we don't have that issues because the nature of private investing and the illiquid nature of it inherently reduces the ability from active trading or ill-informed decisions on borrowing money so that you can short a position or long a position. That doesn't really exist in the world of private investing. But at the end of the day, how to educate investors to make sure that they understand the risk profile, but at the same time presenting investment opportunities that excite them and that a few years out their expectations are met. That's our goal, meeting our customers' expectations by feature high risk but exciting and compelling investment opportunities in private markets.
Yeah, it's a really interesting answer. It makes a lot of sense. I think I get, and hopefully people listening, they understand the value proposition of the business. They understand why this is, so interesting to investors who want to, allocate a portion of their portfolio that they might not be accredited, and they want to still be able to invest in early stage startups or crypto projects or even real estate and even video games, which we can touch on later a little bit. Um, but why would so for a company like SpaceX, I also understand, I guess I'm flipping to the company side. I also understand why an early stage venture would want to raise through a public. Maybe that's just the best option for them to get capital. But a company like SpaceX, has no trouble, as far as I'm aware, raising capital. They haven't gone public, but it's a very promising company, which a lot of people I think would be happy to invest in more of the accredited investor universe. Why does a company like SpaceX want to offer some of their equity on Republic?
Not just SpaceX, let's use a very concrete example of Airbnb. In 2018, Airbnb asked the SEC to give out equity to the home lister on their platforms, right? They're about to go IPO. And the notion that when they go IPO, there's going to be a few thousand employees and former employees and a couple hundred investors that get obviously very, very wealthy. But the entire Airbnb community, including the tens of thousands of customers, those who list their homes in the early years, they contributed so much to the platform, get nothing out of it. So imagine the interest for even late stage companies to provide equity, skin in the game, just a little bit, is both incentivizing their existing customer to list more and a general notion of fairness. So the SpaceX deal that we did was a secondary deal. So it wasn't SpaceX, raising from Republic retail investors, and SpaceX is a B2B business. They don't have retail investors. That doesn't mean that I don't think that B2B companies or that Elon one day doesn't think that, hey, we won a bunch of people to be able to participate early. That means tens of thousands, if not hundreds of thousands, to participate early so that when SpaceX goes public, a much larger community also rise with that success. So I think that notion of including your community, whether your customer base or just the public at large, out of a notion of financial equity, is something that you're going to see founders of successful companies, over time embracing, and that's undoubtedly is going to be a trend.
Yeah, it's interesting. You mentioned Elon Musk might want to include some retail investors. I saw a tweet that you actually surfaced where he was talking about how, Starlink and how he might want to, enable a large population of retail investors to get in there. And he said, hold me to it. So I'm holding him to it a little bit. But
Was
I
that a
think,
recent tweet, Jake? I did not see that.
yeah, I saw, I'll send it to you after the show, but it was, I think I did a decent job of summarizing it. It was basically like people wanting to invest in Starlink, and he responded to someone saying like, I'm hoping to get retail investors involved on this.
And
Um,
Jake, if I may share just a very quick stat that may be very obvious to sophisticated industry leaders like you, but maybe new to a lot of retail investors. 10, 20 years ago, a company would go public at like $200 million in valuation, sometimes half a billion. Right now, the Airbnb, Uber, Palantir, they're all going public at like $50 billion valuations. What does that mean? That means that much of the growth and the wealth to be captured was captured when a company is a private organization. By the time a company goes public, the rest of the world, retail investors, come in to basically, at a very, very, very mature stage, and therefore really can no longer participate in the early success. So as companies take longer to go public, it becomes even more compelling that more people can participate early, privately, rather than just waiting for an IPO in order to get in. I think that makes economic sense, and it really is only thing that's fair socially, as well as in terms of community engagement.
Yeah, I totally agree with you. I think that I've done some thinking on this, and I've basically come to the perspective that the distinction of accredited investors, in my opinion, it's presented as protecting the public from doing, making foolish investments, but really, to a point you made earlier, and maybe you didn't say this directly, but my perspective is that it creates an unequal playing field where, not only, the rich get richer anyway, just due to compound interest and everything like that. But when you actually open asset classes to them that are just fundamentally not available to the public, such as startups and such as like a company like Airbnb, um, which can raise from, angel investors and venture investors and private equity or whatever it might be, all the way up until they're a $5 or $10 billion company or whatever it is. And then only at that point do they go public. It's, to your point, the whole growth curve, it's not available to the public until the point at which, obviously, this is a successful company. The question is only, will it continue to be like an Airbnb level success, or will it be like the next Amazon? And then obviously, there's opportunities in the public markets as well. But I think, to your point, it is a shame from my perspective that people can't participate in those early higher risk, higher reward investments. And, people can go to a casino and bet it all on blackjack. And now, they can go and do sports gambling as well. So it's like, from my perspective, what's the difference? Um,
In fact,
what
$100 billion spent or lost in Vegas every single year, and $80 billion spent buying lottery ticket every year by Americans. The vast majority of that is from non-accredited folks.
Yeah, so it's a bit unfortunate, but I am hopeful through platforms like yours that we're heading towards a future where more people can invest in more assets across all sorts of different classes, and just screen really exciting opportunities and follow their interests. Some people are more interested in startups than they are real estate, and some people vice versa. I do want to touch on, while we're on the subject, there was a recent, which I'm sure you're a heck of a lot more familiar with than me, a recent change to the accredited investor uh, definition and rules as set forward by the SEC. And I was excited by that because, to get into banking, I had to take a couple of series exams, not either of the ones that qualified me by this new regulation to be an accredited investor, but the opportunity to be able to take a test before you have the worth or income that would define you as an accredited investor. Um, to me, that's logical, and I was really excited to see that. Would love to hear your thoughts on that recent change.
I'm gonna pat ourselves on the back a little bit in that the SEC chairman's statement announcing that change has a shout out to Republic. We and my colleagues in the legal department have been very active in working with the SEC to reform various dated rules and regulations. Last week there was another change in the private capital market rules and regulation framework that would be making it far easier for companies to raise from retail. And in the case of the accredited investor definition, Jake, it's long overdue. We're the only company, or we were the only country in the developed world that doesn't have the sophistication component to this definition, meaning since the Great Depression, we define accredited as meeting a certain wealth or income threshold, just loosely defined a millionaire. Well, if you're a very new Harvard MBA grad with debt and definitely not a millionaire, but you're super sophisticated and spending 2, 3 years at Goldman, you definitely are more sophisticated and more aware of risk profile than my, 85-year-old grandma who's been saving her whole life and now is an accredited investor, but really doesn't know anything about tech or startups, right? So that sophistication definition is what was recently added to the accredited investor definition. In other words, it's going to open up private investing or a realm of private investing to young professionals who have financial experiences but may not have that wealth and income net worth. So not only that, I think it's just a natural and the right thing to do, I think that it's going to contribute meaningfully to the pool of capital that's going to be able to get deployed into startups from people who also can be of help because they're the customer, they're the future advisors of these startups. So I think it's good for everyone involved.
So I think we've covered to a high degree the importance of democratizing access to these investments to non-accredited investors. I want to take that one step further and talk about, you mentioned Republic. It's a platform that's available to an international population. What's the importance and benefit of expanding opportunities for investment, outside of the States to make it so that people around the world, especially now that, we have Twitter and, the internet in general and various ways for people, especially English speaking people all over the world to have as much of an idea of what they're doing, investing in American assets. What's the importance of expanding that ability, worldwide?
If I may, Jake, have a bit of a philosophical observation in answering this question of yours. So, I think everyone nowadays can agree that it's the economy and innovations that define our future and the wealth and the prosperity and the health of human civilization, certainly in the past and definitely in the future as well. So, how do ideas become products and have a chance of becoming a company like Uber that then produce hundreds of thousands of jobs around the world is by getting financed capital flowing into it. So it's that bridge between finance, between capital resources and ideas that drives innovation. So today, and I think the purview of AngelList in 2012 is that they primarily just funding amazing ideas coming out of Silicon Valley. But I think we all can agree that people anywhere, everywhere, from Vietnam to Alaska, from Alabama to Nigeria, all have very good ideas. It's just that very few people are as fortunate as Americans, and very few Americans as fortunate as those who can make their way to Silicon Valley. So if you open up the capital sources through a platform like Republic, first just American residents. But if you imagine that if everyone around the world can invest as little as 10 or $5, it sounds small per person. But if you aggregate a million of them, $5 each, that's $5 million. That's enough capital to finance probably 50 new companies or maybe even 500 new companies in a place like Ecuador or Vietnam, where people are educated with tons of good ideas and they don't need a lot of capital to launch. So the notion of expanding this model of financing, of innovation financing, the focus is on how do you finance more good ideas globally. And in order to do that, you have to encourage people everywhere, just like recycling, that it doesn't matter at what age and how much money you have, what you do, that deploying small dollar amount to finance the next the new innovations that you believe will change how we all operate and live and work. That I think is the what we aim to build. That is bridging and growing that awareness both among innovators as well as everyday folks who has an interest in seeing a more prosperous future for us all.
I love the vision, and the philosophical answer is certainly much appreciated as always on this show. How do you view crypto as helping contribute towards that vision? I know you guys recently or relatively recently launched your own token. Would love to just hear your perspective there.
That's a great question, and that vision is not possible without distributed ledger technology. I'll give you just one very concrete example. Even from day one in 2016, we allowed people to invest as little as $20 on the Republic platform. Now, that's all fine and good for an investor from Florida or Texas or Alaska using her credit card or through ACH. Now, because the fee would be, 50 cents, even less, out of the $20 investment. It's not possible for an investor from Singapore or Vietnam or Peru to invest $100 on Republic because the current banking fees would be so high that they would charge something like $30 to facilitate a single ACH wire from Peru or Vietnam to a bank account in the US that we house for the company. Obviously, it makes no sense to pay $30 in fee and make $100 investment, right? It got to be like in thousands of dollars in order for that fee to be worthwhile. And when it's thousands of dollars, it's out of reach for people in Peru and Vietnam. So the notion of enabling people globally, cross-border, to invest small amount at scale is only possible through blockchain technology currently and how it's being evolved. That's just one example, Jake. When it comes to the ability to break down an asset like a house or a piece of art, now we can break it down to a billion pieces so that people can buy 1 billionth of a Mona Lisa or a fancy hotel in Beverly Hills and still can afford it. So that notion of global private investing, retail at scale and small amount cannot be done without blockchain technology. And we, as far as we know, and I know, the only traditional investment platform that has successfully integrated and embraced a blockchain into our business model. And we obviously will only continue to do so. It's a technology that I think will be the underlying bedrock of every single financial product and financial services companies in the world by the end of the decade.
Yeah, I think it's great. You guys are, not only talking about this stuff, but you're setting the example through the token. And you mentioned like Airbnb and Uber earlier, and maybe this is slightly different, but I've spent some time thinking about how, the Uber drivers, Uber may have asked if they could issue equity, wasn't really possible. They couldn't end up doing it. And in the end, especially if we move to like autonomous driving, the Uber drivers are going to get kind of, the short end of the stick on the time that they've spent contributing to growing that business, through their work and through their, talking positively about it and everything like that. And I think one of the things, and Airbnb is similar, although I think they may have a better chance at incorporating the hosts in some way, whether it's through crypto or I don't know exactly how. But how do you think about, crypto as enabling, and is this a part of your thinking with the Republic token, and, enabling people who contribute to any business really that benefits from network effects, to enable those people to actually realize, money from being incentivized with a piece of the business, whether it's equity or profit sharing, whatever it might be.
Yes, I just think that looking at social trend, and if you look at millennials and beyond that, Gen Z, the level of engagement that young people want to have with everything around them is definitely vastly more and will only be more so over time. So out of that, I think that the notion of them being an early customer or even a not so early customer in a company, they're gonna want to have to see something back. So, airline mileage points was in some ways an early version of crypto, right? You go to on United Airlines, the more you fly, the more you get points, but you can only trade them in for credit. I mean, if United Airlines mileage points were to actually pay out dividends, that is a token of or a token-like incentivization model. And if you somehow have a market that people can trade and buy these mileage points, then that's exactly what a digital securities would be. So what we're doing in the concept of digital securities and tokenizations, and particularly when it comes to sharing small amount of revenue or profit share at scale to your customer base so that you can grow and incentivize the customer base even more. That is not like out of thin air or new. It's just an evolution of customer engagement from the days of mileage points now into with technology into a new form that can provide actual economic interest in terms of things of value and also the tradability and the liquidity of that. So these elements are new, and I think it's going to make the incentivization model even that much more powerful. So we're obviously do have done the very first profit sharing digital token in the US that's available even to non-accredited customers. We definitely will not be the last, and I think we hope to innovate in this space and set out the framework so that other enterprises can then use that framework and more or less the same legal compliance infrastructure and do the same so that they can bring more value to the customer base and grow even faster. We certainly have with our own model.
It's a great perspective. Republic has been very acquisitive in the last, I don't know how long, but recently you made an acquisition of Next Seed, enabling like a local business investing product. Before that, Compound to enable the real estate investing, and also Fig to invest in video games. What has what drove you guys to take an acquisition strategy versus building some of these things in house? And if you could just kind of shed some light on, one or more of these acquisitions, and why you're excited to bring them on board and enable the product on the platform.
Yes, for a company as we grow and expand, and we view ourselves as a platform that aggregates different types of deals in different markets. So having the knowledge base, the domain expertise in each new industry that we enter into is definitely the number one problem to solve, right? Unless you have that expertise, you can't really onboard and curate deals. So either you can acquire that expertise by hiring team members and build that up organically, or if you find like-minded entrepreneurs out there with that expertise who see Republic as 2 plus 2 equals 8 rather than equals 4, that's when the conversation of an acquisition becomes natural. And I think that's the approach that we had with Fig, game development financing, which we brought on in April, Compound, which became Republic Real Estate as of June, and Nextseed, which is Main Street, small businesses that are primarily non-tech on a debt model, a revenue sharing or debt financing model. We also don't have the domain expertise there, and the team, particularly the CEO and founder of Nextseed, Young Ro, whom I very much admire, and also a former attorney turned entrepreneur, and he's been the CEO of Nextseed for the past 6 years, and he's joining Republic as our COO. So it's very much bringing on like-minded talents, and in some cases, an acquisition makes more sense than building that up organically, which is more time-consuming and obviously higher risk.
That makes sense. And you guys have been growing super quickly, not just in terms of these different offerings that you're enabling through acquisitions, but also in the sheer amount that's been invested through the platform. I understand, I think it was $200 million or so that's been invested through Republic thus far. And it's a relatively young company still, but even over the 4 or 5 years that it's been around, I understand that like 90%, just by looking at the chart on the website, it looks like about 90% of that capital has been within like the last couple of years, and you guys are just skyrocketing in terms of growth. So it's super cool to see. one of the other features that I saw on the website was this autopilot offering where I'm not sure if it's just within startups or more broadly, but there's this ability to um, basically put a certain amount of money in, it looks like, and then set your portfolio on autopilot where it's kind of indexed across different offerings that Republic has, and you don't really have to make any of the decisions for yourself. I think with early stage venture in particular, indexing is a super important strategy. It's very hard, like you said earlier. A large percentage of these companies fail, no matter how good their plan might sound. Could you talk a little bit about the autopilot program and what was the thinking there as well?
Yeah, I thank you, Jake, for highlighting a product that was built so that we could educate or encourage investors to follow a risk profile that we think is advisable. So let me put it another way. It's a product that meant to encourage people to invest in a lot of deals. If they have if they have $1,000 to invest, they should be putting it into 20 different deals on Republic rather than randomly picking one deal and thinking that this is going to be it. Early investing or private investing in general, the rule is diversification, diversification, diversification. Even Sequoia or Andreessen Horowitz, the best VCs, out of their portfolio, maybe 2 out of 10 yield substantial return, and probably easily half yield absolutely nothing. So the notion of an autopilot is that it makes it simple for an investor on Republic to check a few boxes of the criteria that they want to see in a deal, and then programmatically, automatically, whenever a deal meets those criteria, an investment is made out of certain metric that the investor would provide. It may be $50 every single time in a female founder backed by a top tier VC. It can be like that specific, or it can be in every single real estate deal, but got to be residential and only in Miami. Whatever it may be that fits their profile, we just want to encourage people to do so in a diversified manner. That's first and foremost. And the second one is that we're going to integrate that product with retirement fund account, IRA specifically, so that people can do so, perhaps allocate 1 or 2 or 3% of their IRA assets and invest programmatically, broadly into early stage private deals. I think that's pre-tax, tax-free, and that's just a sensible way compared to 100% into some random index of like public companies. I think that's a little dated, and I think millennials will want to be much more involved early on in private market investments.
Yeah, I think that retirement product sounds like a no-brainer. It sounds really cool. I know we're coming up on time, so I want to wrap it up and give you the last word. But I think, Republic, to me, you guys I know have a tagline: crazy today, obvious tomorrow. To me, it seems like Republic is pretty obvious already. And I can hear your passion in the way you talk about the company and your vision, democratizing access to investing. It's exciting to watch, and look forward to seeing what you do in the future. With that said, would love to give you the opportunity to, if you have anything that we didn't get to cover, or just sending people to where they can learn more about Republic and learn more about you.
Thank you so much, Jake. I mean, it's just been like an honor. It's such a pleasure. And I'm really grateful that we get to share the perspectives. I think on an end note, I just want to share another tidbit, which is if you people look at the year 2030, something like between 50 to 75% of Fortune 500 companies in 10 years, the biggest companies, they have not existed yet today. They're in someone's head or someone's garage. So if you think that these companies will literally define humanity, society, wouldn't you want to have a voice in picking the innovations, the ideas that you think may one day be that next Fortune 500 companies? So I think it's beyond just wealth generation. That's important, but it's also being a thing that I think everyone should do to have a voice in deciding these things that gonna control how we work and live and interact with each other. So republic.co is the website, not .com, .co, and we hope that everyone should check it out. And you see something, or if there's a founder story that you find compelling, may it be $5 or $500, at the very least, it's a good learning experience. And who knows, hopefully it can be the next Uber or Airbnb.